Welcome back, everybody, to the second session. This is a panel which is going to be discussing partnerships and interoperability in the payments and remittance ecosystem. Now, partnerships in the remittance ecosystem have become more critical than ever, allowing different verticals to share competencies and support the industry as a whole. In this session, you'll hear how your business can utilize its strengths and work with partners to facilitate maintaining a winning business model. Now, today's session, I am pleased to introduce our expert panelist. As we have Patrick Gutmann, who is the Managing Director of MFS Africa's UK and European entities, and also heads up one of the business units within the group. Group Corporate Affairs and Institutional Engagement. Now, in this capacity, he is responsible for managing the group's partnerships with banks and non-bank financial institutions and its engagement with the regulators, governments, and the development sectors. Hear it for Patrick. Next we have, no, it's not Mark Ruffalo, it is Jake Melito, who is a Senior Manager of Global Enterprise Partners, Worldpay from FIS. Jake Melito is a Senior Manager of Enterprise Partnerships at Worldpay from FIS and leads their digital e-commerce partnership ecosystem globally. He has been in the payment space for 3+ years, focusing on expanding Worldpay from FIS's partner presence in the digital and financial services segments. Let's hear it for Jake. And then we have Richard Spink. He is part of the GBG business development team and looks after channel partnerships at GBG. He's worked for the last 12 years in ID with GBG and Experian. Prior to delivering global ID verification partnerships, he worked at American Express. Let's hear it for Richard Spink. And a man that needs no introduction, but we will anyway, who insulted me in the earlier session. It is none other than our moderator, Saiful Alom, who is a technical customer success manager at RemitONE. He is a software professional with over 25 years of experience across IT, telecoms, R&D, and fintech. He has led the development of RemitONE's products and is now responsible for the customer success team, helping customers reach their full potential. Let's hear it from our moderator, Saiful Alom. Right. We will have 1 hour discussion with about 30 minutes for Q&A. Please do make sure you have your questions lined up. We'll also be taking questions from our virtual crowd. Hello, virtual crowd joining us from around the world. It's great to have you back with us again. Thank you.
Right, it says I do the introductions. And I think great introductions already by Sajid for our panelists. This whole session will be about partnerships and interoperability, and I think without these things, without doing this kind of partnerships, none of us can work, and it's crucial to have partnerships between us, and I think each seat here represents a different type of partnership, and they're all very important to all of us in the chain of things and the way things flow. Right, sorry, a bit loud, sorry for this. Should we go to the first question? I think we'll address all of you. So we can start from the far end and come here. So the very first question is, how significant is this remittance industry? Who are the traditional and new players in the remittance ecosystem? And what are the developing trends within our ecosystem? Okay, that's 3 questions, but if you need to... I don't know who packed it.
I'll start, although it's very significant because we're all here. Not because we are here, but it's extremely significant in terms of talking about it from the point of view of our business. The traditional big players, Western Union, MoneyGram, everyone's heard of them, and then there is a huge number of businesses who are involved in the space as well. Big and small, new players. Different corridors. Again, from a GBG point of view, we get to see some of this stuff via yourselves, but we're also working with businesses like Wise and Revolut as well, who picked up a huge amount of business just by sheer I suppose you could call it marketing, and that's the bit that I think is quite interesting, is you've got the infrastructure now required to do this which is provided by fintechs like RemitONE, makes it easy in theory to go into the business, but to scale it I think is really hard. And I think that's where you need, as an MTO, you need a partnership. You need to make use of the partnerships with the various businesses that you're working with to try and help you scale it, because you're not going to be able to do it all by yourself. So it's massively significant. I think the thing that I picked up about 4 years ago was, again, at a RemitONE conference, where there's that figure about the World Bank requirement to try and reduce the price of each transaction, or rather reduce the take of 6% down to 3% of each transaction. So that cost is obviously prohibitive to everyone involved in the process. So it's also again, it's good to be involved in an industry where we are all trying to get to that goal ultimately as well.
So the final part of the question is, what are the developing trends within our ecosystem? So what do you see?
I think globalization, but what does that mean? So I think digitally everyone talks about the pandemic's driven a process of digitalization, and in theory this is global, but as we talked about in the last panel, actually it's a very fragmented global world at the moment. And again, from our experiences, that regulation is very fragmented as well. So regulation isn't proof of ID and proof of address in every country. Regulation states a different process in each country based on what the regulator and the financial authorities want to deliver. So, you know, the trend is that the software exists to globalize these processes and reduce price, and the regulation gets in the way of that process.
So yeah, Jake, same questions to you. If you're repeating it, then let me know.
No, I think I got it. Okay. It's a good question. So I think obviously very significant. I mean, so much so that the World Bank has mandated and the G20 has agreed to reducing prices across the board. I think World Bank has money remittance at something like 1% of global GDP. And that goes up in, I think, emerging markets as well, up to maybe 10%, 11% in some emerging markets. So obviously very significant. Globally, I think as part of kind of Worldpay from FIS, where I work, their portfolio, it's a big component as well. So I don't think any more needs to be kind of said on the significance of it. I think in terms of where the industry is heading and kind of where the World Bank wants it to be from you know, an expense and pricing standpoint, there's certainly kind of a long way to go. Emerging trends, I think there's a lot. I think the biggest one that I'm sure folks will talk about later today is kind of the emergence of blockchain technologies and how that can kind of eliminate some of the cross-border costs associated with cross-border transactions. I think some of the legacy players like MoneyGram that Richard mentioned earlier have made some really interesting strides to kind of jump into the next generation by using blockchain. There's a few other kind of components, open banking. I think neobanks are starting to change the game as well. Going back to the MoneyGram example, some interesting stuff they've done. I know they announced a partnership recently with Stellar Network, a blockchain technology, in combination, I believe, with Circle to provide USDC stablecoin payments and kind of remittances globally. So effectively what customers of MoneyGram can do is bring cash to a MoneyGram location, let's say in the US. USDC will be minted by Circle and then transmitted on the Stellar blockchain to, let's say, Nigeria, where a MoneyGram customer in Nigeria can then either pick up the cash you know, in Nigeria directly from USDC and then kind of off-ramped into cash, or they could keep the USDC and trade it for another cryptocurrency that they want. So when we're talking about interoperability, I think that's kind of a great use case and a good example. But like I said, there's a lot more that can be done, I think, in terms of getting the fees down around cross-border. Blockchain's a good one. There's a few others as well, but it's interesting.
Well, interestingly enough, blockchain is another panel session that we'll have tomorrow, and I'm hosting that as well. I'm doing.
All right.
So
Tune in.
Yeah, that's good. Yeah, tune in, folks. Okay, same questions to Patrick now. And
I guess I'm not going to repeat what has already been said. I think everyone agrees commercially it's a big and important market segment globally. It's one that continues to grow. I guess the aspect I would want us to also not forget is that it is a critical service, and it's a critical tool for many individuals. So the social impact that remittances and P2P payments have, I think, is also critically important. And I think we mustn't forget that yes, it's big commercially, and yes, we are all benefiting from that in one way or another. But there are people who are very, very dependent on the services that we collectively provide, and I think that's important. In terms of trends, again, we are seeing a lot as well around blockchain, crypto, and so forth. We're also, of course, seeing a multitude of big and small players that are playing in more and more niche sort of markets and niche segments, and that is something we see continue to grow. But I think there's another aspect, and this is, I guess, relevant to us as we are a Pan-African player, and that is we're starting to see a lot which wouldn't be normally classified as traditional remittance, but it is P2P, and that is the informal cross-border trade, which is actually the buying or selling of goods, but in actuality, it's a person paying another person. So it's not true remittances in the traditional sense, but from a payments perspective, it's a P2P payment. And that's obviously an area across the African continent, which for a long time has been unseen. It's oftentimes been driven by and heavily cash dependent. And although that digitization is not happening as quickly as I think many would want, it is certainly taking shape. And we're seeing volumes growing in that area as well.
Okay, all right, thank you very much for that. Good answers, I think. It's a generic question, generally speaking, so it's, we'll get into the nitty-gritty. The next question is, how have things changed post-pandemic? And we can start with you, Patrick, and then go to Richard, and of course, Jake can have a comment on. So, how have they changed things for you in particular post-pandemic? What are the changes?
I mean, I think the most natural and obvious one is obviously where there were, and in certain markets and in certain segments where there were a hesitancy and potentially in some cases some barriers to digitizing, we've obviously seen by default a more willingness and an open willingness to look at digitizing certain payments. So we have seen a move obviously from cash to digital, which being a digital payments player obviously has benefited us. I think the other thing that obviously the pandemic did was the mobility of all of us collectively sort of came to not a complete standstill, but many of us were stuck, and that also I think drove certain volumes, but in a slightly different way. Now I think that borders are opening up, people are moving. We're obviously seeing different payment flows emerging that during the pandemic we didn't quite see, because there was the consistency of the payment flows was there because a lot of people were not as moving as freely. So those are some of the big changes. We've also seen quite some positive, although it's not there yet, we've seen quite some positive moves from regulatory perspective, that there's been an openness to talk about digitizing certain payment flows, which in the past were not really on the agenda at all. We've also seen some regulators taking a more, and maybe the downtime in the pandemic has allowed them to think more proactively around creating specific regulatory frameworks for fintechs and sort of payment players that in the past, if we look back 5-8 years, were very much regulated as a commercial bank, whereas in actuality they were not commercial banks. So we've seen some move. We are far from where we would want it to be, but at least there's some move in the right direction.
Yeah, very good. Richard?
Digitalisation is, again, echoing what Patrick said, it's the sudden awareness that actually that's going to be the only way to do business. And so on the ground in the UK, for example, you've got very small one-shop MTOs going, we're stopping, we've moved our office to a smaller premise, and we don't want to see people face-to-face. I mean, it's not that they don't want to see people face-to-face, but it's, you know, in practical terms, can we do this online? So can we run a process online to move all of our existing customers onto a digital journey? And so that's happening. And so a lot of the conversations that we have are around how do we make that process easier for our customers to work with us digitally. And that's, you know, it's not just remittance, that's happening across all financial services sectors. And it's funny because I was at a conference last week, was looking at wealth management, which is the complete other end of the spectrum to sending money home, if you like. And you have the same issues. So the very wealthy have someone to do this stuff for them, and so they can't run a digital solution because they don't want to get their hands dirty. And then you've got the other end of the spectrum where you've got individuals who just aren't technically literate. So how do you provide software and advice that enables them to send money where they want to send money? So the same conversation is happening.
Have you seen a growth in this area in the post-pandemic?
Well, I think all it means is that those conversations are happening now, and that's being taken seriously. Whereas pre-pandemic, it's okay, someone will just come into the shop.
Yeah.
And so but now it's someone. If I don't have to have all these people coming into the shop, so yes, you're seeing that, but it's still not as quick as you'd expect, I would also say. It's a bit like everything.
Okay, thank you. Jake, just any comments?
Yeah, I mean, I think another interesting data point is that, I know this predominantly happened in some emerging markets, but during the pandemic, a lot of banks just closed their branches or didn't have them available to folks that wanted to go in and exchange cash or deposit or send someone money from a local branch. So people were forced to kind of digitize. I know we've kind of beating a dead horse here, but that's effectively what happened. So there was further adoption, and we saw that globally, not just in emerging markets, but pretty much everywhere around the world. I know in Africa predominantly, there was a huge adoption of mobile money, but I just think that people were kind of forced into having a larger digital presence when they were looking after their finances. I know a lot of neobanks kind of propped up and have since expanded their offerings, not just in terms of kind of IBAN and VIBAN accounts, but they're starting to offer kind of, with the increased traffic and the increased customer base, they've begun to offer alternative kind of payment methods and different ways that people can kind of transact with one another. So in some sense, there's been a lot of innovation that I think has been supported by the growth across pretty much the entire fintech sector. So, yeah.
Okay. We'll stay with you, Jake, because with the next question, what are the benefits of smaller players partnering with the larger players in the remittance industry?
Yeah, I guess as one of the larger players, we kind of have an interesting perspective. So FIS is a Fortune 200 company. So typically the folks we're working with are going to be smaller, either MTOs or different partners. I think it depends, right? Let's say you are an MTO that specializes in a specific corridor, maybe US to Mexico, right? And you want to expand your offering to other corridors. Let's say you want to expand into LATAM or maybe some corridors in APAC or even across EMEA, right? You almost have to partner with somebody that can bring you into those markets. And oftentimes you have to find different partners that can bring you there. So there could be one that specializes in the Latin American market, like a dLocal, someone in the African market, like a Flutterwave, or you could partner with someone like FIS or kind of a larger fintech that already has these kind of partnerships in place and can bring you and your business into different geographies globally. So I think it depends if you're looking at scaling and kind of where you want to start kind of doing business. Instead of having kind of multiple segmented relationships with providers that can help you expand into specific markets, partnering with somebody perhaps larger that has those in place already, And then it's just kind of a simple API integration. You have access to a variety of different payout rails and different alternative payment methods.
Yeah, this is what this is all about, I think.
Yeah.
Because this is, without partnerships, we're not going to, achieve what we want to achieve in the timescales that we want to do. So it's really good.
Yeah, and I think it helps kind of with the interoperability problem as well. It's not a foolproof model, right? A lot of these systems don't speak to one another, and a lot of the payment rails are different. But if you kind of outsource that to a larger partner that's already thought about these problems, like FIS and kind of what we're doing with the SWIFT network and ISO 022 and blockchains and stuff, we can kind of help bridge those gaps for you so that you don't have to think about them yourself.
Patrick?
I think, I guess as with any partnership, the strategic rationale behind the partnership, there needs to be sort of something that makes it bring something additional to the table than if you were to do it yourself. And I think if I think back several years back, I think a lot of players were trying to do a lot of things themselves. I sort of grew up in a traditional banking environment where I remember when I was early in my career, a lot of banks wanted to do everything themselves. And it was sort of the natural tendency that they should bring it all in-house, they should develop it themselves. I think more and more we've seen over time that there are niche players who are very, very good at some very narrow sort of scope, be it product, be it services, be it other aspects. And I think you can add a lot of value by being narrowly very, very good. And obviously the name of the game then is how do you integrate with others, and how do others take advantage of the competitive sort of nature or product that you've developed. So I think there is, clearly there are different dimensions. One is, and Jake has mentioned, is sort of reach and scale. Partnerships, obviously, as the world becomes more global, and particularly in sort of the businesses that we're talking about here, having a certain reach becomes critical, and trying to do all of that yourselves can be costly and time-consuming and so forth. I think another dimension is innovation. I think partnerships can bring new and innovative products, and you can overlay sort of complementary products and services to what you are already offering to your end customers. And ultimately, I think to some extent, we are all more and more the game of building an ecosystem in one way or another. And I think the ability to manage and integrate partners is becoming a critical core set that more and more organizations need to be able to do effectively to be successful.
Right, thank you. Richard, do you want to say?
Yeah, I echo what Jake and Patrick have said. In our world where it's KYC compliance, what we find is, as a business, we've grown by acquisition, and we've made a conscious effort to focus on the bits that we're good at, but also you can't run a business on a global basis and do it all yourself. So again, to that point, if you look at ID verification, there's niche areas in that process. So at GBG, we're good at recognizing identity documents, but we will use a third party ourselves to do a liveness check. And so that's a good example of where, from a technology point of view, they're niche providers around that specific piece of software. Again, with data, we don't own any data as a business. We aggregate KYC data and access to it. The benefit of that for a small MTO trying to scale is that they can come to a business like us and get advice on the bits of the process that we know about. And compliance is a minefield, but another way of thinking about compliance in simple terms is what are your corridors, and what's the regulatory requirement to transact in that corridor. So if you look at Europe as an example, there's a reason why MTO businesses in Germany aren't trying to start themselves in Germany if they're trying to expand into the EU, because the regulatory requirement there in Germany is to capture a video, essentially a video conversation, which is extremely cumbersome if you're just trying to send $100 back to say Nigeria, for example. It's not a great process. So So there's a level of understanding that's required in terms of breaking down for your customers what is it that they're trying to do, and what are the implications if they do it in one geography versus another as well. And all of that again, but that's we're aggregating our knowledge to make that available, and we can't do that by ourselves because we come a cropper.
All right, thanks. I'm not favouring Jake here, but the next question is about payment gateways. So, so how do you see the future of payment gateways? What can we expect to see in this space in the future?
Yeah, interesting question. So Worldpay is not, I mean, we have a variety of different payments tools. So we have, we offer a gateway, and we also are the world's largest merchant acquirer. So I think there's different kind of things we're doing on both fronts, but in terms of innovation in the gateway space, I think a big thing we're seeing right now is a lot of adoption of what we call payment orchestration platforms, which have kind of propped up over the last few years, but have really kind of taken a hold, I'd say, in the last maybe 1 or 2, and we're starting to see a lot more merchants move to them. Effectively, what they do is they connect to a variety of different merchant acquirers, different gateways. It could be a fraud service, it could be a KYC vendor, a variety of different payments and payment adjacent technologies, so that if you're a merchant or an MTO and you want to connect to, let's say, an acquirer in LATAM, a different acquirer in APAC, and you want to do KYC in both, and you want to do fraud protection in both, and there are different providers that offer maybe better approval rates from a fraud perspective in APAC than they do in LATAM. If you're a merchant or an MTO, I mean, prior to payment orchestration, you would effectively have to go out and build integrations to each one of these different segmented softwares. So with the emergence of these, and gateways are starting to do this as well, they provide a single API integration for these merchants and MTOs to connect to, so that they can have truly kind of a global reach and scale through one integration that manages their entire payment stack fairly seamlessly through oftentimes no-code or low-code integration. So that's a big one. On the acquiring side, I think we're starting to see kind of a larger adoption of, I know one of the biggest advancements in products that we've released recently is offering stablecoin settlement to our merchants, so that they can settle instantaneously on the blockchain. There are a lot of different markets where you have kind of T+ up to 30-day settlement times. So us offering USDC settlement and stablecoin settlement to some of these markets enables merchants to have instant liquidity and instant settlement for their transactions, so they can access money a lot faster. And we're starting to see governments start to adopt this as well, right, with CBDCs, which are effectively government and central bank-backed stablecoins. So I think we're on the topic of interoperability. That poses a whole new kind of set of question marks about how some of these stablecoin networks and some of these CBDCs and central banks are going to create a network that is truly interoperable. Because right now they're fragmented. And I think we'll hopefully have to see some regulation come in that says, hey, you need to kind of sit these on one network, so that we can kind of finally eliminate some of these cross-border costs. But yeah, I think those are kind of the 2 big trends. There's a few others. Open banking, banking as a service, I think, are becoming emerging players that gateways are kind of helping merchants and MTOs connect to. But yeah.
All right, thank you. I mean, if either of you want to comment on this, or I mean, I know it's payment gateway.
Well, I think the orchestration piece is the other thing as well. So you talk about orchestration from a payments point of view. Our clients want to orchestrate everything. So the industry itself is going towards this model of it's just one API to do everything related to fraud, KYC, compliance. It is interesting, but it's also interesting because all of that's coming from the US, and there's big dollars backed to try and make that global, and it's not as straightforward as you want it to be.
Okay, so the nuances are going to be interesting.
Well, the nuance is exactly that Europe is a complete, despite being a block in theory, as we know, it's not. And the same will apply geographically around the world. So it's that, but that model is absolutely right, that orchestration piece, the idea that there's just a couple of integrations and you've got everything sorted. So.
certainly in the EU, we see that even within the EU countries, the regulations vary quite a lot.
Massively.
And so it's, it's always interesting to work with them.
Yeah.
Okay, so the next question is for three of you, and we can start with Patrick, I think, in this case. So many different types of partnerships exist in the remittance ecosystem. How does partnering with your company assist money transfer operators? So Richard, Patrick, you can start.
So, I mean, specifically in our case, we run, in effect, the largest digital payment network across the African continent. And the genesis of MFS Africa is really around interfacing and providing interoperability to mobile wallets. As it stands today, if any partner with us would gain access to over 400 million mobile wallets, which is about 70% or so of the mobile wallets that exist on the African continent. And as many know, I'm sure in this room, that mobile wallets are starting to, one, they're growing faster than bank accounts. Two, there are more of them than there are traditional bank accounts on the African continent. And thirdly, more and more of them, these mobile wallets are now starting to more or less look and feel and act just like a bank account. So in many ways, they're becoming sort of the equivalent of bank accounts. Through us, any partner will gain access to all of those mobile wallets. We have subsequently also expanded our interoperability to include the card rails, include in many countries banking rails. And so it's a network now that spans 40 African markets, as I said, for over 400 million wallets. You also gain access to all the local currencies if that is a sort of a preferred model. So we will handle the local currency sourcing. And it's a real-time network. So within 30 seconds of a message hitting our hub, we pay out in local currency to the beneficiary in any of these 40 markets across the African continent. And we overlay that with compliance and sort of transaction monitoring and sanction screening and so forth. So we believe it's a benefit to any partner. We also know, obviously, as much as it could be a single integration to all of those 600 or so corridors, we know that that's not necessarily, what every partner will look for. Some will look for multiple countries and multiple corridors. Others will use us for specific corridors. And we try to make it as seamless and as easy for our partners as possible.
Richard?
Yeah, Patrick touched on, in his world, similar type of idea in our world, which is, at a high level, what we do is global KYC, but running that process in as I say, the regulators state that process has to be different in every country. So the high level is to enable the capture of proof of ID and proof of address to validate those pieces of information, whether that's validating a document, validating a proof of address document, or using data to validate that information. So the dream is to sell globally and deliver globally, but in reality, it's talking to customers about what their key requirements are on a corridor-by-corridor basis as well. And that's the overriding principle of what we're trying to do, is provide transparency and granularity in that process so that they understand why a decision is being made so that they can onboard a customer. So the idea is, the principle is to try and automate all of these processes as far as is to automate these processes where there's a wealth of data available to establish who people are. The moment you bring in friction into the process, that's where you've got to try and work to make that process as slick as possible. But at a high level, it's trying to make it easy for an MTO to scale the compliance side of what they're trying to do as well. But understanding the details key to that. So.
Jake, finally.
Yeah, interesting question. I think a lot of it kind of depends on, creating a bespoke kind of solution for the customer at the end of the day, right? So in the case of KYC, right, you could have different regions in which you need to have kind of a modularized approach to how you're doing KYC, right? Where let's say IDV fails, you have to be able to go to Passport. Let's say maybe the Passport is something that gets approved faster. Maybe you want to add that in on the KYC layer as something you want to do first. It's the same with kind of payments and kind of what Worldpay does around APMs. We know which payment methods customers are asking for when we're talking to merchants. And they know what their customers want, but we can help them kind of get into the next generation, right? So I think in specific markets, we see emerging trends sometimes faster than some of the merchants are seeing them. So effectively what you're doing when you're working with Worldpay is you're not only getting access to really the largest payment processor globally, but you're also gaining access to the amount of transactions that we're processing and the machine learning capabilities that we have that provide insights that are valuable as you're looking to scale or grow your business or offer new and kind of emerging payment methods for your customers. Another piece I think is that we're effectively a series of M&A, but also partners. We have our own proprietary products, right, like card acquiring and a lot of the APMs and banking rails are ours. But we also partner with a lot of folks globally that help us kind of expand our network and thus expand our offering to merchants globally. I think I mentioned these earlier, like a Flutterwave allows us, the partnership that we announced a couple years ago allows us and our merchants to process payments domestically in Africa, which is huge because at the end of the day, where you have domestic licenses and domestic MTLs is effectively how cheap you can have you can process payments for the merchants that are working with you. So the goal for us is to have those partnerships in as many regions as we possibly can so that we can process payments as locally as we possibly can so that our merchants get higher approval rates and cut costs and don't have to deal with FX as often as they do sometimes. So yeah, partnerships are huge for us. I think it's probably you know, one of, if not the most high priorities at the company right now.
Yeah, so recently I've noticed this offering has increased from payment gateways, you know, something like Worldpay and so on, in terms of, you know, APMs as you were talking about. You know, so before it's just so straightforward, we just want to pay by our credit card, but now you have the choice of offering that each payment gateway, and it's more than, you know, not just yourselves, but others are doing the same thing. So it's interesting. So it's interesting how interconnected we are getting, and, you know. So.
Yeah, I mean, I think at the end of the day, the goal is to ensure, if you're a merchant, to ensure that you can accept any kind of payment method that your customer wants to pay with as cheaply and as efficiently as possible. So we need to make sure that we have all of the alternative payment methods available in whatever countries we process in. At the same time, having the foresight to add these APMs and add different payment methods, whether it's open banking or paying by crypto, as new offerings that we can kind of introduce to merchants to say, hey, today your customers are paying predominantly by debit and credit card, but tomorrow we're seeing a rapid emergence and a rapid trend of adoption of maybe Google Pay, Apple Pay, Pay by Bank, crypto. So staying on top of that is massive as well.
I mean, on that point, I can also add, we have seen, and obviously I've spoken a lot about the payments, the disbursement flows, but our network is bi-directional and we also collect from mobile wallets. And clearly as part of the pandemic, a lot of purchases went online, and that was the case in many of our markets as well. And obviously many of the big e-commerce sites were not set up to necessarily collect from a mobile wallet. However, many of their consumers do not have cards, especially in many of the markets in which we operate, and may not even have a bank account. And the mobile wallet is the one store of value that they have. So we've seen actually an increase in collections through mobile wallets or from mobile wallets as well as another means. And it goes straight to your point that if you're a merchant, you really just want to get paid. And it doesn't really matter if it's through a card or through a bank account or through a mobile wallet, as long as you can accept the payment that is the choice of that consumer on the other side who wants to buy something from you.
Thank you. So the next question, we'll move on because I think we've got like 3 more questions to go. I'm not sure about the timing, so let me know, guys. We'll start with Richard this time. Can you provide some examples of other successful partnerships and why they work? For instance, payout partners. Maybe that was Patrick. We should start that off, actually. Patrick, you start that one off because you're a payout partner, essentially.
You said successful partnerships, right? I was just making sure.
Yeah.
Look, I will touch on a few different. I mean, to us, we are obviously, we're in many ways a sort of an infrastructure player or a B2B player. So and partnerships is pretty much the essence of what we do. Because on the one hand, whether it is with an MNO, whether it's with an MTO, whether it's with a bank, in many cases we are a customer of theirs and they are a customer of ours. So if we take MTN in any country, we obviously use them to terminate payments into their mobile wallets, or we collect from their mobile wallets. So us having access to their infrastructure is critical, but on the flip side is for them, be it MTN Benin, and they want to extend cross-border payments to their mobile wallet holders, use us to access those other cross. So in our case, almost every relationship we have is approached and is a partnership in one way or another. So we, as a company, sort of the ethos of the company has been one that's very much focused on how we manage partnerships. I think where we've seen sort of more recent successes in partnerships are in very specific and narrow cases. So it can be a specific service, be that KYC, be that sort of transaction monitoring and screening, be that overlaying a certain payment flows with an insurance product, for example, where we partners to ensure that we can bring complementarity to the services and products that we have, rather than trying to develop it ourselves. Yeah. So sort of expand the offering of the service that we can then extend to our partners, but doing so through partnerships. You know, the other big area we have spent quite a bit of time is on banks. Traditional banks still play an important part, and especially as I alluded to earlier, we've seen more and more of these cross-border informal trade flows across the African continent. There being a desire to digitize those, and in some of those flows, banks play an important part. So we've extended our bank partnership quite extensively over the last several years as well.
So yeah, moving on to Richard.
Thank you, Saif. Partnerships are massively important to our business because we are aggregating data, access to data for our customers. We aggregate access to over 350 different businesses who supply data. So the majority of those are supplying address data. So it's just the local country equivalent of the post office who says these are all the addresses in this country. And then you have credit reference agencies. So when I started 10 years ago, credit reference agencies were our competition. And that's actually evolved over time. We don't find them competition, but we work with all of the local credit reference agencies again. So they will work with us because they see what we do as a focus on identity and KYC, whereas what they tend to be doing is credit reporting. And that's their area of expertise. So, so our business is a business that didn't exist before the internet. You know, we started as a business just checking addresses, sending out discs to people saying these are all the addresses in the UK. That was what we did 30 years ago. We just do that globally now. So it's expanding on that footprint. But it's the same principle is that our job is to try and make sense of specific data that's useful to bringing it back to MTOs, their business, to make sure that they're onboarding the right people. But we can't do that unless we have these partnerships. And if we don't have these partnerships, that's it, the business goes. But there's layers and layers to that. But we keep coming back. That phrase interconnected keeps coming back. It is in one sense, it's an interconnected and small world, but it's the same partners in every country. So whether we're looking at UAE or we're looking at the US, it's that where is the information that's required to identify who the residents of a country are, basically, and that's what we're trying to deliver. We have to have those relationships to make what we do work as well. But again, you know, bringing it, a good example of what we do, I suppose, is businesses white label our service, and as a very good fit if a business is providing information on businesses, then we'll help them provide the information on the individuals as well. So we don't go out and talk to corporates and say, how do you do your business reporting? They'll go to a specialist for that. But that specialist will in then turn come to us, can you give us the information on the individuals? So that's a good partnership for us. But you wouldn't be aware of it unless you knew about our business.
Okay, so finally, Jake, 3 words.
Yeah, I feel like this is a good opportunity for me to plug the RemitONE Worldpay partnership. But I think it's interesting, right? So, you know, I think to Richard's point, you know, if what Worldpay does best is we do card acquiring, and we provide payment rails for different merchants. But we have a variety of different kind of adjacent products that allow us to monetize across a variety of different channels. So one being KYC, right? If we're offering KYC to an MTO, an FX or CFD trader or crypto native, typically, and this isn't just Worldpay, but typically this will be a third-party white labeled product, sometimes by GBG. It could be any kind of KYC partner. The same goes with our fraud tools and a variety of different products we offer. So what we've done is effectively say, hey, this is what we're really good at, and these are the gaps that we have. So when we're looking at new partnerships and kind of where we're looking to kind of expand our offering, we'll say, hey, where are the gaps within Worldpay? Where is maybe a partner's gaps, and kind of how can we fit those two together to create a joint value proposition that makes sense in a specific market? So if you're, you know, providing, let's say a crypto rail like Stellar, which I mentioned earlier, they need to be able to provide KYC, which they'll use a partner to kind of plug in there. They need to be able to be compliant with FATF travel rules, so they'll plug in a partner there. So it's huge. I mean, I think at the end of the day, you should focus on what you do really well and then partner with folks that can do the rest. And those are the elements typically of a successful partnership, right? Is knowing what you do well, and then partnering with someone else that does perhaps what you don't do so well really well, and then going to market effectively together so that you can kind of approach an entirely new segment, an entirely new market. And it's advantageous for all of our clients as well, right? Because they can just have that single integration and have access to a variety, have access to our partner ecosystem, RemitONE's partner ecosystem, just through that one integration. So yeah, more the merrier, I think, on partnerships.
Thank you very much. Okay, the next question, I think I'll start with Patrick this time. How can MTOs leverage partnerships to expand their networks without necessarily having a presence in that country?
I think I mean, the whole conversation's around partnerships, and I think one of the aspects of partnership is as much as we want to believe sort of that there is a true and sort of one single view on the globe. The reality is it is very, very, they're very unique, peculiar aspects operating in each and every market. And I guess another element that partnerships can bring is that understanding and knowledge of a specific local market that otherwise, if you're running a global business, you may not have. And I think, you know, being able to tap into a network where there are indeed, and as you allude to, so a specific company may not have a local presence in a market, say Nigeria or Cote d'Ivoire or Senegal, but there are partners they can leverage and tap into who will have that local knowledge. And of course, you also overlay that with regulatory coverage, which can come in the form of either sort of a direct license or some sort of letter of no objection or engagement with the central bank, which again, if you're trying to do that yourself, running a global business, it can be quite tedious and very difficult. So I think those are aspects that partners can help you gain. So we've talked a lot about sort of the technological advancements or advantages by partnering and product advantages. But I think there's the advantages of knowing the local market and also getting that regulatory coverage.
Thank you. I'm going to move on to the next question because we've got 5 minutes left. And I'll start with Richard and then finish with Jake, I guess. When evaluating a payment vendor or a technology partner, what are the critical questions to ask, is the question.
Okay. So obviously depends on the technology, but I think the main thing you want to uncover in that conversation is what level of support are you actually going to get from that technology vendor. So it's always about, it always feels, as someone who's selling technology, it's easy for it to feel about price, but actually if you take the price away from it, you need to try and establish exactly what you're buying. And if you don't know what you're buying, you'll struggle. So all I'd say in our world is, if individuals ask me, what do you need to know that you're getting a solution that automates as much of the process as possible. And automation isn't the same as coverage. So it's understand exactly what it is, what problem you're trying to solve, and talk to someone you think, and try and make a decision on whether they will support you to get that software to work at its optimum. Because if they don't, they're just selling you an integration.
Yeah, that's a very valid point, I think, about support, because I think, we can do what we like and provide all the products that we want to. But if we don't have that, because people don't understand necessarily how everything works or how it applies to them, and they need that kind of support to make sure.
In theory, everything is off the shelf these days, but it's not off the shelf once you start trying to use it. Yeah.
So, Jake?
Yeah, I mean, I think just to add to that, I think it's, oftentimes you're right. I think you have different fintechs that might specialize in something, but they'll say that they have a product that's kind of fit for purpose for an MTO or a merchant, when in reality they're really just trying to kind of upsell you on something that you don't actually want. So really good point there. I think another question I think that's kind of important to ask, especially if you're kind of a global enterprise and you're looking to expand, or you're already global, is where, and kind of where, as a processor, it's important where we kind of have local and domestic processing capabilities. So if I'm a merchant or an MTO that has customers in specific regions, the question isn't, where can you process payments for me? Because all of the global players will just say everywhere, minus some of the restricted markets. But the question you should be asking, at least from a processor, is where do you have the relationships that kind of Patrick was alluding to earlier? Where can you kind of provide me insight with the local banking networks and kind of what people are transacting with in those specific regions? Where do you have money transfer licenses? Where do you have domestic banking relationships so that you actually have your own license and can process domestic transactions for me? So I would say don't brush off the question when you're asking kind of where can I do this? Really double down on kind of what is your actual capabilities and how local are you in these specific regions that I have customers in. Because at the end of the day, what your relationships are with your consumers are highly dependent on who you partner with. And if they're not as local as you are in those areas, then it's not a successful partnership. So.
Anything from you, Patrick? You want to say?
No, nothing to add.
No? Okay. Thank you. So that's good. We've finished our half an hour, I hope. I think it's a bit more than half an hour, it seems like. Open to questions now? Yeah? Okay.
Hi, I have a question for Jake Melito, Worldpay. Can you see Worldpay competing with Western Union, considering you have every possible connection and link to Africa and South America? You could easily become a very large MTO yourself.
Yeah, really good question. No, I don't. I mean, they would be a customer of ours at the end of the day. I don't want to get in like the details of it, but they're way more local than we are. So going back to like the domestic coverage, we have great domestic coverage in Africa, but it's supported through a partnership that we have that frankly doesn't cover the entire continent. So Western Union does money remittance very, very well. And kind of going back to what I was saying earlier, right, is we'll focus on things that we do really well. We're happy to partner with Western Union, but at the end of the day, they need an acquirer to process cards. they need to use us for a variety of different kind of components that help support their business. So FIS and Worldpay have products that can kind of support Western Union's growth. But we don't offer, and like you said, would we get into the space? I don't know, good question. Maybe one day, but for the time being, we'll focus on kind of helping support the Western Unions of the world expand and support their customer base.
Hi, my name is Norris, and I'm from Flutterwave Cameroon. My question goes to Patrick. Today, we understand the partnership and interoperability for Africa, especially for the French-speaking Africa. But we also understand the challenge in terms of outbound remittances in this area. How do you, MFS, solve this problem today as far as that challenge is concerned? Thank you.
It's a very good question, and obviously it's not a challenge that we can solve by ourselves. The reality is the only way we can solve it is collectively. Working with, again, local partners and working closely with regulators. A lot of the barriers, as we know in this room, to digitize cross-border payments is not technology barrier. And it's also not actually a consumer demand issue. The demand is there, the technology is there. It's oftentimes exchange control and sort of regulatory barriers that are at play here. So I think advocacy and education is important. I think it's also important to be able to demonstrate that it can be done safely, it can be done properly, and that it's not necessarily going to mean that all currencies is going to sort of flood out of the country. Oftentimes in our engagements with regulator, it's about the fact that we can bring both sides of a particular flow. So there's both inflows and outflows. And that if you actually open it up, we have seen time and time again that you're actually seeing both sides grow. And net, you're not seeing a sort of a drastic outflow. So, but it's a major challenge, and it's one that's not going to be solved easily or quickly. And it requires a lot of, I think, patience and a lot of advocacy and sort of education and discussions.
Great, thanks. Thanks everyone for some great stimulating comments. Patrick, I'm going to pick on you again, so apologies
That's all right.
for that, and to the others who are getting an easy ride. Probably two different areas really. One is, I just wondered if you could talk a little bit about your relationship with some of the regional or Pan-African payment systems, because obviously you talked about mobile particularly, but people use different methods. Yep. And traditionally they've been very bank dominated. So it'd be interesting to know how you see that evolving. And then the second one on interoperability. I'm quite interested in probably everybody's views on domestic interoperability at a mobile level, because it's still very difficult in large parts of the world for people to be able to move money from one proprietary network to another, and whether you see that changing, and if so, how? Thank you.
So maybe I'll start with the last one around domestic interoperability, and obviously this is a discussion that that oftentimes is dominated and driven by the local regulator, the central bank, who wants to create that interoperability. And I think it has sort of transcended, because originally it was very much around creating, think of an ACH, sort of a local ACH for bank clearing. But over time, of course, as mobile wallets have grown, they have tried to bring in and have required to bring in the mobile wallets as well to provide that interoperability. Some countries are sort of well advanced in that journey and have local domestic switches. And in many cases, we partner with them, because in essence, they serve a role of providing the domestic interoperability, and we can then, assuming we have the regulatory coverage and the demand for it, can provide the cross-border interoperability. But I mean, it's interesting, and if I sort of just take a step back, the genesis of MFS Africa was, and our founder was the first one who rolled out mobile money in MTN. And he rolled out and started mobile money with MTN across a number of markets, and pretty quickly realized that when he first launched it in MTN Cote d'Ivoire, that people wanted to be able to send money to their family in Benin, or in Senegal, or in Togo. And MTN, of course, hadn't thought about that. So MTN Togo was not connected with MTN Cote d'Ivoire. So the starting point was, how can I, as the founder now of MFS Africa, how can I provide interoperability only within MTN? Then, of course, quickly it became, well, if I'm doing that for MTN, then I should also be able to cross over to Orange and Airtel and so forth. So domestically, I think domestic interoperability is always an important element because it stimulates mobile money in the broader sense. Because if you provide full access to mobile wallets to be able to act and sort of behave more like bank accounts, then obviously that stimulates the growth of it. The second question around regional players, and I can also speak to, for example, AfriExim's initiatives around PAPs, which we oftentimes get asked about. The simple answer is, in almost all cases, we partner with them because they are trying to solve a specific sort of challenge or problem, which doesn't necessarily solve the same problem that we're trying to solve. So in some cases, yes, in certain regions, we would be competitors, if you will, but in the broader scheme of things, we are oftentimes partners. And PAPS is a perfect example. They are obviously looking much more at bank rails, sort of central bank to central bank, but they also realize that mobile money is sitting with a huge amount of money and is sort of an important element to bring into that. So they would be and we've announced a partnership with them and are sort of working with them to see how that will work. I think the final element to make, and this is maybe one which I alluded to earlier, and I think as a company we were fairly convinced when we started on this journey about 13 years ago that cards, as we knew it in the US or in Europe or in Asia, would probably not take off to the same extent in many of the markets in which we operate. And the notion was, you know, mobile money was starting to grow and there didn't seem to be a demand. And of course, the acquiring infrastructure wasn't there at the time. So there was a sentiment that cards wouldn't necessarily play as important role as a payment, both a payment instrument, but also payment rails. However, as part of the e-commerce boom, you know, and as we start to engage with some merchants, take Netflix or, you know, any of the big ones, they understand the importance of being able to collect from a mobile wallet, but they don't necessarily want to go and change their whole user interface to be able to capture the data to be required to do so. So we think more and more card credentials, and they may not be physical cards, but sort of card credentials is starting to play an important role in terms of giving access to the global e-commerce market. And we think, and we're seeing a number of initiatives where there are now card credentials being overlaid on mobile wallets for that specific purpose, and that's one of the use cases. But it's a very unique use case because you now have people wanting to pay their Netflix subscription sitting in Kenya, and they want to use their M-Pesa mobile wallet. And currently, Netflix can't capture it in their own. But if they had a card credential that was directly tied to the mobile wallet, you can do that. So.
It's an interesting point. I forget who from Worldline, our friends over at Worldline, mentioned this earlier in the last panel, was kind of how we can kind of use tokens and tokenization and network payment tokens to kind of help facilitate that. We're starting to see a larger emergence on network tokens, and a lot of the card schemes are kind of mandating it as well, or else you incur extra fees. But huge kind of innovation right now going on with tokens and kind of how they can support mobile wallets and make it so that merchants that want to process for mobile wallets like M-Pesa and other ones globally have the ability to do so and don't have to do a ton of extra legwork on the development side to make that happen. So.
Very little to add from my point of view, but tokenization is something that's happening again in identity. So the end point is ultimately that you will just share the credentials you need to share to do what you want to do. So getting a loan for a mortgage, you'll need to share more credentials than you will if you just want to say pay a Netflix subscription, for example. So that idea of tokenization of identity is also coming in, and that will impact KYC ultimately. But it's a long way away. In reality, it's one of those 10 years time. But that whole process, as we talk, is key.
Yeah, I mean, what's interesting, I think you're also seeing KYC is the idea of like passport KYC and being able to kind of have a profile for your identity that you can use across different parties. I mean, especially if you're a merchant that wants to have a separate KYC provider, or you're a customer that doesn't want to take 7 videos of themselves holding up their driver's license or passport, right? So creating that kind of token and passport.
And there are different versions of that again around the world, and how successful that's been. So in Sweden, Bank ID is everywhere, and that's a digital ID process. If you look at the US or if you look at the UK, those countries are miles away in terms of trying to provide that sort of infrastructure.
So I'm just going to go to an online question.
Yeah, we have some questions from the online audience. So a question from Tom Schrager. With the blockchain opportunity, such as Stellar, the traditional remittance businesses are being challenged. However, it is still a big fight to win hearts and minds, whether it is through digital or cash. What strategies do you see for new remittance companies to disrupt the status quo?
Right, who wants to take that one?
I can take it. I mean, it's a good question. I kind of alluded to it a little bit earlier. I think one of the biggest use cases right now is with MoneyGram, right? So they're partnering with Stellar to provide a cash kind of merge between cash and crypto in combination with what Circle's doing with USDC stablecoin. So I mean, the use case for that is that, one, I mean, it's kind of twofold. It's great for the customer or who's trying to remit the money, because you can come in with cash and someone can pick up and you can remit money instantly on the Stellar network or in blockchain in general. But the interesting use case, I think, for MoneyGram is that they also, probably for the first time ever, have the funds in their account before they're actually remitting the money to the end customer instantly, right? So traditionally they will, and oftentimes you'll see this with money MTOs that are offering instant remittance, is that they just have the liquidity that enables them to push the payment out. But with Stellar and blockchain technologies, in the case of MoneyGram, is that they have the funds instantly in USDC. So it creates a huge benefit for them in terms of the risk that they're taking on, not just from FX exposure, but from the amount that they're actually able to hold in escrow before they kind of push the payment out. So not only do folks like you and I have the ability to pay somebody in a different country or remit money to someone in a different country instantaneously, but for the MTO themselves, they're eliminating a huge risk burden in terms of FX and what they have, what they're holding. So that's a great example of it. I think there's definitely a ton of challenges around the interoperability between different blockchains and whether they can kind of communicate to one another to actually create one unified system. So there's still, I think, a long way to go there, but that's a great use case of it, and I think a really interesting one that's probably we're going to see a little bit more often moving forward.
Can we take another one?
Yeah, I think a follow-up question, really, maybe you've answered it. What are your thoughts on the new Ripple payment network? Will it be effective considering not all countries support crypto, like Pakistan? Will there be more networks like this, and what effect will they have on traditional channels?
Yeah, it's a good question. I mean, I think Ripple's not too dissimilar to Stellar in some situations. I think Ripple's key purpose is to kind of put up a fight against the traditional money remittance industry, right? Is to eliminate a lot of those cross-border fees that are associated with money remittance. But I think it's a good point. The countries that don't accept crypto, for whatever reason, it's going to be a challenge. I think we're going to start to see more governments use private, we'll call them, it's not the actual term, private blockchains, but different blockchains instead of having their own public blockchain that's government-backed. I think we'll start to see them use maybe the Ripple network or different kind of stablecoin networks to use for their CBDC. So I don't know, we'll see. It'll be, I think as we start to see more adoption of these central bank digital currencies, we're going to see more countries probably open up. I mean, right now, I think in a few African countries, we're up to maybe 9 or 10% adoption of crypto, and them using it as kind of a remittance tool. But yeah, I mean, a huge blocker is going to be whether the central banks and whether the regulators in the countries specifically are open to accepting crypto. I mean, if they're not, then it's kind of a non-starter.
Thank you.
Just one more, I guess we've got time just for one more question from the floor. I think the gentleman over there, yeah.
Thank you. My name is Wale, United Bank for Africa. My question goes to Patrick or Jake. How are you coping with regulatory restrictions in, for instance, Patrick mentioned presence in 40 African locations. Given the diversity of regulations in these locations and given the underlying knowledge why these regulatory restrictions are there, which is obviously to protect, of course, regulatory reserves. We do know that a lot of African central banks are coping with illiquidity in their local markets. And of course, the unwelcome activities of speculators. So how does this play in your field? And the second question is, you mentioned both sides of payments. You make payments and you do collections. So is this in local currency or in foreign currency? Thank you.
Shall I start? Okay. So, so the answer to the last, yes, we deal predominantly in local currency. Now, of course, many of our partners may fund in hard currency, but part of the value add we bring is the access to the infrastructure that we've set up to source local currency and hold local currency and being able to fund local currency payments and also collect local currency. We operate in a local currency environment, but provide sort of the global infrastructure to do so. I think with regards to your first question around the regulatory barriers and challenges, I guess there are a few ways that those can be tackled. In some cases, we do so ourselves by having local presence, having local license, and being regulated and engaging directly with the central bank on our own merit based on our own business activities and so forth. But in many cases, in all of these markets where we operate, we have our core partners. And in many cases, they are the MNOs, but they're also some of the biggest banks, UBA being one of them. And oftentimes, the engagements with the regulators is in conjunction with partners. And it is we call it advocacy, but it's generally speaking, it's a conversation around the benefits of allowing certain partners and certain players in the market to enable cross-border payments. And oftentimes the restriction, as you alluded to, is outbound. Inbound, most governments are very happy. And in some cases, the restriction there is you need to bring the dollars in because they want to see it onshore. But oftentimes the reality is that we have seen, and this is especially where you look at the informal trade flows, which oftentimes is excluded. So when people and the regulators look at the flows, they oftentimes think remittance flows coming in, and they think that everyone's going to take their local currency, convert it to dollars, and send it off to the UK or to Europe and so forth. The reality is there's this whole element of informal trade flows, which today currency is flowing through those borders freely. If you digitize it, you have visibility of it, and you can actually see the flows that are coming in that way as well. We work a lot with regulators to try to demonstrate that and try to have those conversations. But it's hard. It's hard work, and some regulators are more open than others. And obviously they have a sort of responsibility for the financial stability of their economy, and that's oftentimes what takes front and center. However, I think over the last 2 years, the sort of regulatory discussions and engagements we've had have been far more progressive than I think I've seen in the last, I would say, 5 or 10 years.
Yeah, I think just to add to that, really well said. I mean, you're much closer to this than I am. But I think we have an entire government advocacy team that's at least trying, I think, our best from, I know it's mostly North American and European focused, but to kind of educate them on what consumers are asking for in terms of different payment rails and interoperability and reducing friction and fees. So oftentimes what we're doing and what that team is tasked with is saying, hey, this is what we need to help our merchants and help their customers have more frictionless payments. So we have the data and we have, I think, kind of the industry insights to help governments create regulations that are fit for purpose. But as Patrick was kind of alluding to, some are a little bit more reluctant and hesitant than others, and it just depends on what jurisdiction it is.
Yeah, I mean, we could probably squeeze in one more. But
yeah, we have another question online. So how does the panel see the banking industry attitude changing towards remittance operators? Still anti-competitive, or are there niche banks now who are more open?
I'm happy to take a first stab. So I think, you know, this is obviously a generalization, but I think for a long time banks did not sort of see remittances as big as it probably is. And I think for a long time banks did not put as much emphasis and focus on sort of the remittance segment or the remittance business as probably some of them could have and should have. I think we're starting to see some banks trying to get into that again. Not sure whether it is too late for some of them. The flip side, of course, is we referenced Revolut and Wise and so forth, and you know, whether they are remittance companies or they are banks or they are non-bank financial institutions, no one really knows. But the reality is they very much play in the remittance space as one of many things that they do. I think the digital neobanks will definitely play an important role in sort of driving innovation and pushing remittance, sort of digital remittances going forward.
Yeah, I completely agree. I mean, I think Wise and Revolut and the neobanks are kind of the next wave of banking and how they're intersecting right now with money remittances. I mean, people will debate on kind of what they're categorized as today, but yeah, I mean, the fact that you can provide IBAN accounts and also remit money seamlessly in one application. I mean, I think the next panel might be on super apps, but that's probably an interesting one to tune into if you had that question and kind of get a better feel for it from that panel.
The only thing I'd add on that is whenever I'm talking to an MTO starting out, it's getting the bank account seems to be the process that takes the longest time. So irrespective of whether the landscape's changed or not,
yeah,
it feels like it's horribly difficult.
Yeah, just a few quick words. Just firstly, to thank you for the panelists for this interesting discussion. I think I've learned a few things as well, even though I'm very much involved in these partnership things as well. So yeah, thank you very much for that.